everyone, welcome back to RBI and welcome to Finance Current Affairs session. In today's session, we are going to discuss a very important news article of finance, that is, the Reserve Bank of India has proposed to expand the scope of the trade receivables discounting system, and this will improve the cash flows for the MSMEs. So this is going to benefit the MSMEs a lot. So now the first question in our minds that come is, what is this TReDS? What is this expansion of the scope that is going to happen? So all of this we are going to understand in today's session. Do not worry. And the TReDS is a very important platform that you all must understand. Okay. So today let's have the complete clarity about the TReDS and the expansion of the scope in the TReDS that has been proposed by the Reserve Bank of India. But now, before starting with this very important concept and before starting with this very important news article, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all your common queries answered. If you want to know about the examination, that what is the pattern for the examination, what is the syllabus for the examination, and what are the previous year cutoff for the examination, all of these queries are answered through this single guidebook. And for your common queries, there are the definitive answers that are provided in this guidebook. You do not have to visit different links. You do not have to visit different websites. Even if you want to know about the preparation, what should be the sources for the preparation, what should be the strategy for the preparation, all your common queries can be answered through this single guidebook, and it is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below. Okay, so do download these guidebooks. So now coming to our today's topic, that is the expanding of the scope of trade receivables discounting system. So the RBI has recently released on 8th of February 2023, the RBI has released the statement on the developmental and the regulatory policies, and on that statement, the RBI has proposed to expand the scope of the TReDS, that is the Trade Receivables Discounting System. Do remember the full form, okay? Do not get confused in this. So the scope of the TReDS has to be expanded. This has been proposed by the RBI. First of all, let's understand that what this TReDS is, okay? Before moving forward to the expansion that is going to happen. So see, first of all, the TReDS, that is trade receivables. What are trade receivables? Trade receivables is the money that is owed to a business by the clients. So the clients are there and the money, the business is providing the services to the clients, or the business is providing the goods to the clients. For these services, for these goods, the client has to pay money to the business. Now this money, if the client is not able to pay the money right now, so this is the money that is owed to a business by the clients, for which the business has already given the services or delivered a product but has not yet collected the payments, and this is the trade receivables, because the business has got the invoice, the business has the bill of exchange, but the business has not got the money for this invoice or the bill of exchange. I hope you understand this first step, that is the business has provided the goods or the services and the client has to give the money. But there is the invoice that has been created for the goods and services that has been provided. The bill of exchange has been generated, but the money has not been delivered to the businessman. So here comes the role of the TReDS. Okay, TReDS is an electronic platform that helps to facilitates the financing or discounting of the trade receivables of MSMEs. So what happens that MSMEs are the small sellers, okay? MSMEs are the micro, small and medium enterprises, okay? MSMEs are the small micro sellers, we can say. And only these sellers are allowed in the TReDS. First of all, remember this, that only the MSMEs sellers are allowed in the TReDS. Now, if the MSMEs are selling something to the government departments, or the MSME is selling something to the public sector undertakings, or the MSME is selling something to the big corporates. So what happens that the government departments say that we will pay you next month. Right now we do not have the money, or the money has not been released by the upper authorities. So the MSMEs provide the goods and services, and the MSME generate the invoice that okay, pay in the next month. Okay, the invoice has already been generated for 1 lakh. But the MSMEs are like, you can understand that they are very small business people, okay? They are working from their homes, or they are working from a small rented place, so they need the money right now. Now the government undertaking has said, or the government department has said that we will only provide the money after a month or after 3 months, let's say. So the MSME needs the money right now. So what MSME can do is to provide this invoice in the TReDS. So the TReDS is the electronic platform where the invoice will be delivered and the financiers are there. Now the financiers will be giving the MSMEs the money on the discounted rate, on a less rate. Like on 1 lakh, the financier is saying that I will only provide you 90,000. So the MSMEs will get this 90,000 in the current period. They do not have to wait for the 3 months. They do not have to wait for the 1 month. And the financiers are the one that are waiting for 3 months and that are getting the 1 lakh rupees while paying only 90,000. So let's understand this whole process. So the supplier supplies the goods or services. The supplier has supplied, the MSMEs has supplied the goods and services to the corporate or the other buyers, the government departments or the PSUs, public sector undertakings. So the MSMEs has already supplied the goods and services. The supplier logs in the TReDS platform, that is an electronic platform. So the supplier is logging in the TReDS platform and is uploading the invoice for the trade receivables. That is the uploading of the invoices happening on the TReDS platform. Now, when the uploading of the invoice is happening on the TReDS platform, the invoice becomes the factoring unit. The invoice becomes the factoring unit. Now, this factoring unit consists of the date that when the buyer has to pay, the amount that the buyer has to pay, the balance date or the balance amount, or the amount that already has been paid, maybe half of the amount has been paid, half of the amount has to be paid, the seller account details, the buyer account details. So all of these information are present in the factoring unit. Now the invoice has become a factoring unit after entering into the TReDS. Now this factoring unit will be verified by the buyer. The government and the government department will say that yes, this is how much we have to pay. 1 lakh we have to pay after 3 months, that is on this particular date. So the buyer verifies and approves the invoice, and then the financiers are the ones, that can be some bank, that can be some NBFC. They will bid against the factoring unit, that the factoring unit is of 1 lakh. The government department has to pay 1 lakh, but we are only going to pay 80,000. The other is saying that I am going to pay 75,000. The other is saying that I am going to pay 80,000. 85,000. The other is saying I am going to pay the 90,000. So the supplier accepts the most favorable bid. Okay. So the supplier has accepted the favorable bid, that is the 90,000, and the supplier has got. Now, when the supplier has accepted this bid, then the TReDS generates the settlement instructions. The settlement instruction is released, that is the debiting the financial account. So the financial account will be debited and the money will go to the supplier account, that is this 90,000 will go to the supplier from the financial, because the financial has raised the bid. So after 3 months, let's say, or after 1 month, like the date has already been decided under the factoring unit according to the invoice. So after 1 month or after 3 months, the settlement instruction is again generated. From the buyer, the money is transferred to the financier. Now the debiting the buyer and crediting the financier. Now the financier will get 1 lakh rupees. So the financier has made the profit of 10,000 by doing the, by engaging in this kind of trouble, we can say, by engaging in this kind of the transaction, we can say. Okay. So he has taken the risk that, okay, or he has gone away with the money. Okay. So now he is getting the 10,000 as the profit, that is, he is getting the full amount, 1 lakh rupees from the buyer. So now I hope you have understood that the MSMEs cannot wait for the money much. But usually the government departments or the big corporates, they are not agreeing to pay at the exact moment, at the current moment. So the MSMEs are not able to pay. They go to the financiers through the TReDS, that is the electronic platform, and they can easily take the money on a discounted rate. Okay. So the TReDS is an electronic platform for facilitating the financing or discounting of the trade receivables of the invoices or the bill of exchange of the MSME sellers. Only the MSME seller are allowed in this TReDS platform. And there are multiple financiers that are present in the TReDS platform that are able to finance for these MSME suppliers. So there are the banks, there are the NBFCs, factor business that are allowed. So now the buyers can be the corporate buyers, the other buyers, the government departments, the PSUs that are buying from these MSMEs. Okay. So factoring unit, a standard nomenclature. This is the name. The factoring unit means used in the TReDS. So this is the nomenclature that is used in the TReDS for an invoice or a bill on the system, that is on TReDS. Now when the invoice or the bill is uploaded, or it is, we can see it is uploaded on the TReDS, then it becomes the factoring unit, which consists of all the information regarding the invoice, the amount, the date, the due date, and the seller's bank account, the buyer bank account. All of this is included in the factoring unit. Okay. So now the TReDS is an authorized payment system. So the TReDS is an authorized payment system. Through that, the TReDS is generating the settlement situations. Okay. So the TReDS is the one that is generating the settlement instructions, and through the TReDS has become the authorized payment system and is also be subject to the oversight of the Reserve Bank of India. So the TReDS is working under the Reserve Bank of India under the Payment and Settlement Systems Act 2007. So the complete process that is going on is that the creation of factoring unit is happening. That is, the invoice or the bill of exchange is being uploaded to the TReDS. Okay, it is being uploaded on the TReDS platform by the MSME seller. The seller can only be MSME. The seller can only be MSME. Remember this. Or the buyer. Now here one thing that you need to remember, that in the process we have understood that how the seller is uploading the trade receivables, but it can be the buyer also that is uploading the trade receivables, because the buyer do not have the money right now. So let's understand the process for that also in the coming slides. So now the MSME seller or the buyer can upload the invoice or the bill of exchange on the TReDS, and then it will be called the factoring unit. Remember the definition of factoring unit. When the invoice is uploaded on the TReDS, then it will be called the factoring unit. Acceptance of the factoring unit by the counterparty, that is by the seller or the buyer. Bidding by financiers. When the bidding is done, the selection will happen for the best bid by the seller or the buyer, as the case may be. Payment has to be made by the financier to the MSME only, because the money is owed to the MSME. Okay. Payment by the buyer has to be made to the financier. Even the buyer can raise the factoring unit. Buyer can go in the TReDS platform and can upload the invoice. So how this is happening? The supplier has provided the goods and services to the buyer, and the supplier has also provided the invoice to the buyer. Now the buyer does not have the money right now, but the buyer will get the money after 3 months. So what the buyer is doing, that the buyer is getting the money from the buyer is uploading the invoice in the TReDS platform, and from the TReDS platform there are the financiers that are doing the bidding, that okay, this is the invoice, this much the buyer has to pay, and this after this month the buyer will be paying the amount. So the buyer financiers will be doing the bidding, and after the bidding the supplier will be paid. The highest bidder will be paying the supplier, that is, let's say 90,000 will be paid to the supplier, and after a particular time the buyer will pay the money to the financier. So here what is happening, that the buyer is the one that is asking the financiers, or that is asking in the platform that please provide the money to the supplier. In the factoring case, supplier is the one that is asking that this is the invoice, please pay me the money. Here the buyer is the one that is saying this is the invoice, please pay the supplier. Okay, that is the only difference that is happening. So MSMEs don't have deep pockets, they do not have too much money, they often face a cash crunch. Okay, a delay in payment for the goods or services provided to a client. So the MSME is providing the goods and services to the client, but the client, the government or the private sector is not giving the money to the MSMEs in the current period. So it can be a major problem for the MSMEs. This can sometimes land a heavy blow on the small businesses, on the micro businesses. So MSMEs became even more hard pressed for funds after the COVID pandemic began. There were many MSMEs that were falling down because they were not getting the money for the goods and services that they have already provided. So units that were not able to manage the acute resource crunch had to cease the operation. And that's why now the RBI has thought that it is the time that the MSME should be provided with the continuous money, or there should be the more financiers that should be present in the trade, so that if the invoice the MSME has, if the MSME has already provided the goods and services, the MSME should get the payment in the current period only, recently only, in a timely manner only. And that's why the TReDS should be given a boost. The TReDS should be expanded. Okay. So the fear of such a situation that the MSMEs will not be getting the money, this is a fear that they have. That what if we give the goods and services and we will get the payment after 3 months? What we will do for these 3 months? So due to this, they usually lose the lucrative opportunities. Okay. So now I hope you have understood the TReDS system. That TReDS is an electronic platform that helps the TReDS has the financiers, the TReDS has the MSMEs, sellers, and the TReDS engage with the buyers. Okay. So the financiers are present on the TReDS platforms. The MSMEs are the one that can go to the TReDS platform and that can ask for the money, or the buyers are the one that go to the TReDS platform and they provide the invoice and they ask the money for the seller. Okay. So it is now proposed to expand the scope of the TReDS by providing the insurance facility for invoice financing. Now the financiers are usually afraid that what if this buyer runs away? If it is a government organization, the financiers are not very worried. But what if it is a corporate body? But if it is a private organization, then the financiers are afraid to pay the MSMEs, because what if this corporate or the private organization falls down, is not going to pay back? So the insurance facility has to be provided to these financiers so that they are more engaged to provide the money to the MSMEs to finance or to discount their bills. So I hope you understand that now the insurance facility will be provided to the financiers, that if they are providing the money to the MSMEs, to the MSME sellers, and the buyers, that is the corporate buyers or the private buyers, if they are not paying, then the insurance will be there for the financiers to get their money. There will be some insurance facility for these financiers. Okay. So here, to provide further impetus to TReDS platforms, their scope of activity is proposed to be expanded as stated below. So these are the measures that will be soon that is proposed for the TReDS platform. So the insurance facility will now be permitted on TReDS. Now the insurance facility will be permitted on TReDS. This will encourage financing or discounting of payables. Okay. So this will encourage the discounting or the providing the money to the MSME sellers for the buyers, irrespective of their credit ratings. And now the financiers will not be very afraid to provide the money to the MSME seller in the mindset that the buyer is going to run away. So they will not be much afraid now, because there will be insurance that will be provided to the financiers. Okay. So the credit rating is how they gauge that the buyer is the good buyer, is going to pay, or the buyer is a bad buyer that is not going to pay. So if the credit rating of a buyer is low, then the financiers do not usually pay to the MSME seller that is selling to that buyer that has a low credit rating. So now what will happen, that the financiers will get the insurance also, and so they will even pay to the MSME sellers that are selling to the low credit rating or the moderate credit rating buyer. Okay. Accordingly, insurance companies will be permitted to participate as a fourth participant. So right now there are the three participants. The financiers are there, the MSME sellers or the buyer, that is the corporate or the government buyers or the public sector undertaking buyers. So there are the three participants, the financiers, the seller, that is the MSME only, and the third is the buyer, that can be the corporate or the other buyers or the government buyer or public sector undertaking buyer. Okay, so the fourth participant now will be insurance company. Remember this. all the entities or the institutions that are eligible to undertake the factoring business under the Factoring Regulation Act will now be permitted to participate in the TReDS, on the TReDS. Secondary market operations will now be enabled on TReDS. So now if a financier is taking a invoice, okay, if the financier is taking a invoice and is discounting for that invoice, so now the financier can sell that invoice in the secondary market. That will be available on the TReDS also. So now the TReDS will also be providing for the secondary market operations. This would allow the financiers to offload if a financier have too many invoices. So now the financier wants that only 50% of the invoices I should keep and the others I should give away. So how the financier will be able to do? Through the secondary market operation, the financier will be able to offload their existing portfolio to other financiers within the same TReDS platform if required. So in the TReDS platform, there will be the secondary market operation that will be allowed. So in the TReDS platform, the insurance companies are allowed to insure the financiers, and the insurance companies has become the fourth participant. The entities, all the entities or the institutions that are eligible to undertake the factoring business under the Factoring Regulation Act will now be permitted under the TReDS, will now come under the TReDS, they can come under the TReDS, as well as the secondary market operations will now be enabled on the TReDS platform. So before, what was happening, that only these were allowed, these financiers were allowed, that is only the banks, the NBFC factors, the NBFCs that have the factoring business license, only those NBFCs. And the other financial institutions as permitted by the Reserve Bank of India were only allowed to participate as financiers in the TReDS. But now all the entities or the institutions that are eligible under the Act, they will directly be allowed to work under the TReDS. They do not have to take the separate permission from the Reserve Bank of India. Okay. So I hope you have understood the TReDS. You have understood the expansion of scope. There is the 3 expansions that has happened. Now the benefits, the decisions are aimed to put more money in the hands of the MSMEs involved in the executing a project. So if the MSME is giving the goods and services, the MSME should get the money, and they need the money, then they are provided with the money through the financials. These would help small businesses get cash more easily to keep its engines running, to keep its working going, while a client is yet to make payment for the goods or services, because the clients are also engaged in some kind of business and they get the money after some interval. Okay, so the clients, if they are delaying the payment, if there is the delayed payment, the financiers can provide the MSMEs money in the current period. The insurance facility proposed by the RBI is likely to encourage the discounting or the financing of the trade receivables of the buyers irrespective of their credit rating. So if a buyer has a moderate credit rating, before this buyer, that is the some private entity, before the financiers would be very afraid that what if this buyer runs away? So we should not give the money to the MSME seller. But now the financiers have the insurance facility. So now they have some insurance. So they will even provide the MSME seller that is selling to these buyers that have moderate credit rating, we can say. So insurance will act as a support to guarantee the low risk profile buyer so that the MSMEs can get the discounting done. So here the TReDS volumes have doubled in the last 2 years. So you can see that how many MSMEs are depending on this TReDS, and now the expansion of the scope of the TReDS is going to benefit the MSMEs further. And an increase in liquidity on the platforms is critical for it to scale up. So there should be more liquidity on the TReDS platform so that it can help the MSMEs, because the MSME sellers are only allowed on TReDS. So TReDS is a platform for the MSMEs. Okay. So the secondary market for financiers to sell their TReDS portfolio will free up capital to finance fresh transactions on the platform. So what will happen, that the secondary market is there, so more trading will happen on the invoices, and this can help in better and more providing of the capital to the MSMEs, providing the money to the MSMEs, and the secondary market operation will free up the fresh capital. Okay, will provide the fresh capital transactions on the platform. So here this was the complete expansion that we have already discussed about. The expanding the scope of the trade receivables discounting system. This has been released by the Reserve Bank of India, and the Reserve Bank of India has shown that the guidelines on the trade were issued in December 2014. So it was issued in December 2014. Remember this, we have understood about the guidelines, and we have understood that only the MSME sellers are allowed in the trades. The buyers can be the corporate buyers or the government public sector undertakings or the government departments. Okay, with the objective of facilitating the financing of trade receivables of MSMEs, these trades has been created. The trades has been created with the objective of financing or discounting the trade receivables or the invoices of the MSME sellers. Okay. So subsequently, the three entities started operating TReDS platform. Now I have told you that the TReDS is under the guidance or under the regulation of Reserve Bank of India. But who is running this TReDS platform? So it is the three entities have started running, operating the TReDS platform, and there are the two other entities that have been granted the in principle authorization. Okay. So here the entities process about 60,000 crore worth of transactions annually. So you can understand that through these TReDS platform, there is the 60,000 crore of the worth of the transactions is happening. Okay. So one of the first TReDS platform was the Receivables Exchange of India Limited, that was incorporated on February 2016 as a joint venture between the SEBI and the NSE, the premier stock exchange in India. The REXIL became the first trade receivable discounting system platform. So you can understand that there are the three other there are the three entities that have started the operating of the TReDS platform, and there are the two more entities such as these. So REXIL, I am talking about REXIL or the RXIL, because this was the first entity to receive the approval from the RBI to launch the India's first TReDS exchange or the TReDS platform. I hope you have understood everything about the TReDS platform. Okay. So thank you very much. This is the first question that I hope you can easily answer, and this is the second question. And do subscribe to our YouTube channel and join our Telegram channel. Here you will be getting the PDF. So thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.